Well, Australia's biggest investment bank has issued a stark warning. If share market conditions worsen, its flagship share trading business could be facing another loss. Macbank's share price has crashed more than 70% from record highs before the global financial crisis. It says first quarter earnings are better than this time last year, but cautions things could get worse. Sue Lannon reports.
Times are tough for the millionaire's factory amid the debt crises in the US and Europe and the share market volatility. And some shareholders aren't happy.
I think the only answer one can give is rather disappointingly. To some extent, I think they've lost their way.
Well, they've had a lot of challenges, but I think there's still some doubt as to whether the money they're paying their executives is more than they should be paid.
Macquarie says earnings for its first quarter are up on the same time last year, but they're down compared to the last few months of 2011. The Macquarie boss says he expects annual earnings to pick up in the new year after net profit dropped by one quarter in 2012.
We continue to expect an improved result for the full year if market conditions are not materially worse than they were last year.
But Mr Moore flagged another loss for Macquarie Securities, its share trading arm, if the volatility continues. Macquarie executives got a serve from angry investors over their pay packets, including from shareholder activist Jack Tilburn. Nicholas Moore has been paid out around $5 million so far for 2012.
Why didn't Mr Moore and others get a 24 or 25% decrease in their salary? Where is their great performances?
While the headline number is large that Nicholas receives, it's frozen. It's put away for between 3 and 7 years.
But overall, the vast majority of investors supported the company's pay plan.
Nicholas Moore, if we just look at the CEO's remuneration last year, fell by 17%, and the earnings were down last year by a little bit more than that, 25%. So his remuneration is being reflected in terms of the performance of the business.
Macquarie's share price has slumped from record highs near $100 before the global financial crisis to $23.87. Its return on equity has plunged too, from highs of around 25% to around 5%. David Spotswood is not recommending that investors buy Macquarie.
No, we've got a hold on the stock. I don't think it's actually outstanding value at $24.
He says the good old days of bullish share markets are over, and Macquarie needs to restructure and cut staff.
The challenge for them is to get their profitability up, and all they can do, if we continue to have this environment, is to shrink the business.
Macquarie employs more than 14,000 people globally.